Good morning, stakeholders and shareholders. This year, over the next 15 minutes, I'd like to summarize a good year in terms of the company's performance by describing the 7 building blocks that we have laid as foundations for an even stronger future. The first building block that I'd like to discuss is our strong 9.2 billion recurring net income attributable to EDC, which was up 40% from a year ago. This was driven by the return to service of the Bacman power plants and the successful commissioning of our 49.4 megawatt Nasulo power plant. The 2 larger Bacman power plant units, which have both been upgraded to 60 megawatts each, are now operating as the most efficient in our fleet. These improvements, as well as better performance across all geothermal business units, drove our consolidated revenues to increase by 20% to 30.9 billion. While our first G Hydro investments income declined, it was not enough to dampen the overall results of the company. Return on assets doubled from 5.6 times to 10.3 times, and return on equity increased from 15.9 times to 29.6 times, due mainly to improved profitability. The other major development I'd like to inform you about is our decision to lower our power rates with our existing customers. With plummeting global prices for coal and oil in 2014, and in response to fierce competition, we took the initiative of offering lower prices on our existing contracts that were expiring by the end of this year and next year. Most of our customers have already since chosen to continue with our services and have entered into long-term agreements with us until 2025, 2030, and even 2040. This move will cost the company about 900 million in the short term, but will provide stable revenue streams in the future. The second building block is our beginning cash balance of 16 billion, which was further strengthened by 16.9 billion of cash generated from operations. Importantly, despite the impact of typhoons Yolanda, Glenda, Senyang, and Ruby on our business, our EBITDA margin still stood at 58%. This cash flow is the lifeblood of the company, which will both sustain and grow the business. Our cash flows would have been stronger were it not for the impact of the typhoons on our Bacman and Leyte business units, which combined made us lose a total of about 1 billion in cash revenues last year. So in response to this clear and present threat that is worsening, we commissioned XPX Marley, maker of 68% of our cooling towers, our most vulnerable equipment, to custom design solutions so that our cooling towers can now withstand typhoons up to 300 kph. SPX Marley completed their designs in 2014, and this will be installed starting July of this year. In addition to this, we have gone ahead and spent on what we call bunker-type control rooms, which are solid, waterproof concrete structures, buildings within buildings that will protect our critical electronic instrumentation and control systems. We also improved the building housings by adding 100% reinforcements to the structural metal cladding. The third building block is our continued growth through our strategy of technology and global diversification. We completed last November 5, 2014, our 150 megawatt Burgos wind project in Ilocos Norte. Today, this is the country's largest wind farm, with a total project cost of $450 million. The project was issued a certificate of compliance by the ERC on April 13, 2015, based upon which it will earn the feed-in tariff rate of 8 pesos and 53 centavos for the next 20 years. 315 million, or 70% of the Burgos wind project's cost, was financed by a consortium of foreign and local banks supportive of the advancement of renewable energy. This led to several recognitions from reputable institutions, including Project Finance International's Asia Pacific Renewable Energy Deal of the Year, Euromoney's Asia Pacific Deal of the Year, and others. On June 3, we will be receiving the Top 10 Global Deal of the Year award as the best ECA-backed green deal to be given by Trade and Export Finance in Paris. This last recognition is particularly valuable from a reputation and brand building point of view because it will be given in front of 400 senior export credit agency and multilateral bankers. We view these recognitions as a shared vote of confidence on the regulatory regime of the Philippine energy sector, as well as our company's ability to execute our growth plans amidst intense competition. We also built our first 4.16 megawatt solar power project in Burgos, Ilocos Norte. The project was issued a COC by the ERC on April 6, 2015, and will sell its output at a feed-in tariff rate of $9.68 per kilowatt hour for 20 years. We believe that we can expand our solar energy portfolio rapidly in the coming years. Since most of you cannot visit our Burgos site, I have a 60-minute video, a time-lapse video to show the construction of our solar power project. I'd like to inform all of you that since the project was completed, it's been generating 3.2 to about 3.8 megawatts this summer. On the expansion of our geothermal business, for 2015, we expect to issue notice to proceed on a new 30-megawatt power plant in Bacman. We also continue to explore and develop expansion areas in our existing geothermal sites. Overseas, we are excited to begin our first major international drilling campaign in Chile in the company's 39-year history this October 2015 with a planned 2 to 3 wells. In preparation for that, we are currently drilling as I speak the top hole section of the wells in our Mariposa concession. The fourth building block is improving our reputation with our investors, both on the buy and sell sides, as well as the debt capital markets. In simple fact, the delays caused by the technical issues in returning Bacman to service dampened our investors' confidence in our ability to execute. So in 2013, we commissioned a third-party study by IPREO in New York of both the buy and sell sides of our listed stock. When asked about EDC, investors then would cite Bacman's delay and poor execution as their top 2 recall items. However, in 2014, as we steadily delivered all of our projects, investors' confidence dramatically improved. First came the restoration of the Typhoon Yolanda damaged plants in Leyte, several months ahead of schedule, then the rehabilitated units of Bacman, then Nasulo, and then Burgos Wind. In the 2014 year-end investor perception survey, the top 2 recall items are now renewable energy and growth prospects, and it seems like Bacman has been relegated to an issue of the past. EDC investors now talk of, and I quote, successful execution of outlined plans, particularly in the Bacman rehabilitation. Another investor said, and I quote, managing recovery efforts through extraneous events like Typhoon Haiyan. Still another investor said, strengthening the depth and capability of executives and operating managers. And one investor finally said, showcasing significant improvements in investor communications. With the confidence of the investors gradually returning to our company, our stock performed really well in 2014, ending the year at 8 pesos and 20 centavos per share, up 54% last year. In addition to the improving perception of our equity investors, we are fortunate to have the confidence of the debt capital markets. In a recent refinancing effort for our wholly owned subsidiary Greencore, we received firm offers of 29.3 billion for our 8.5 billion requirement. This 3.5 times oversubscription allowed us to lower the interest rate to the company by a full 3% and will save us close to 250 million pesos a year in interest expense. Other similar refinancing efforts that will reduce our interest cost and spread out our maturities are underway. As we continue to pursue growth locally and overseas, we will need additional financing. We will nurture the continued interest and support of the capital markets for our company very carefully. The fifth building block of our business are our highly engaged employees. The past 7 years have been a period of tumultuous change for EDC employees, and these changes have made the EDC of today a place only for the very flexible and resilient employees. Through a combination of early retirement programs and management-initiated restructuring programs, the total former PNOCED headcount dropped from over 3,000 people to around 1,400. Then, through a series of strategic acquisitions, both local and international, our headcount today has grown back to 2,400, still below the original complement, while our business has nearly doubled its recurring income. Not surprisingly, when we first measured employee engagement in 2010, amidst all the changes that were happening, our overall score using the Positive Engagement Index of surveys at work was a very poor 59%. This provided us the impetus for change in the way we manage promotions, salary increases, apportion and provide training and travel opportunities, gather as leaders to set and communicate strategy. With these changes, by 2012, our employee engagement score climbed to 70%. While still mediocre, we knew that we were on the right path, so we made further adjustments. I now hold an annual meeting with the union presidents and share with them our priorities and goals for the year. We also hold more site-based MANCOM meetings where senior management will spend an extra half day to do highly visible safety walks and conduct safety drills. We also keep our employees continuously updated through more regular town hall meetings and an expanded labor management council. And finally, we launched a 3-day Power Up session for all employees, including myself, to get 100% of us on board EDC's strategic directions and aligned in terms of the Lopez values that we hold most dear. As a result of these further changes in 2014, our employee engagement score measured using the sustainable engagement models of Tower Watson shot up finally to 88%, 9% higher than the 41 global energy and utility companies surveyed, 4% higher than the top 27 performing global companies surveyed, including Siemens, Shangri-La, the Danone Group, the Four Seasons Hotel Group, and a full 3% higher than the Philippine national norm. This is crucially important because engagement ultimately means that the employee is telling us that they are willing to expend significant discretionary effort for the success of the company. It is the employee confirming through pointed questions that they have the support, tools, and information that they need to succeed, and that while they are at EDC, they are energized and inspired. This phenomenal change over the past 4 years augurs well for our culture and our future. The sixth building block is our decision to change our business model from being a functionally driven value chain to a business unit-driven enterprise, or managing the company through SBUs. This shifted decision-making from head office to the business units, where employees have better visibility on the facts and a richer understanding of the context in which decisions are made. This allowed the business units to manage their costs better, enhance the speed of decision-making, and increase their accountability for the bottom line. This transformation took 3 years of careful planning and detailed execution, and I'm happy to report that this SBU and COE, or Center of Excellence structure, is now firmly in place. The final building block I'd like to mention is our management team. None of the positive results I mentioned earlier would have been possible without the leadership of EDC's senior management team. At the tail end of my more detailed written message in our annual report, I described each of our senior management leaders in 1 paragraph each, which shows the depth and strength of our bench that is diverse and talented. At this point, they don't know this, but I would like to ask EDC's senior management team to stand up and be recognized for your valuable contributions that has led us to where we are today. Can you please stand? You know who you are. Mr. Chua, Avante. Please stand up, our senior management team. Milo, Mark, Jim, Admiral Goles, and Andrew and Manny are at the back. In conclusion, we can see that the company is continuously being shaped and reshaped as the building blocks on which both our present and future are slowly, steadily, and sturdily being built. As we patiently build into the future, we look back, thankfully, at the past, particularly for the confidence that you, our stockholders and stakeholders, have bestowed upon us, especially during the recent trying times. You can be rest assured that we will continue to think of the long-term success of our company, building on the solid foundations that we have so far laid today. Thank you and good morning.